can you share best practices or checklists you used, and I'll start with AJ on this one, to ensure accurate depreciation schedules, especially for clients with multiple rental properties or equipment?
If you were to get a new client in, one of the first things you always ask for, which I put in my returns I give to clients, is the depreciation schedule. So when I receive a new depreciation schedule, I ensure that, one, that there's land on there. Because how many times have you seen that land's just been lumped in and probably being depreciated? And then I check the proper year. Is it 39 years? Is it 27? Is it 15? Is it 7? Is it 5? And then so forth and so on. So that's one of the hardest things, I think, Ellen, is when you get something and you used X software and you use Y. I have a client that has 36 rental properties. You imagine when I do give it up, they better hope they use the same software wherever they go, because of the fact that you have to re-enter all of that to get the depreciation recaptured. So it's vital to do it right the first time and to double check. Never assume just because it came from a reputable firm, anything that it's right. Double check the numbers, double check everything that's there. Land is, I think, Alan, land's a big thing that just gets left off or is lumped in, and then you go back to the 3115 issue.
Yeah. Well, let me bring this question to another angle here, Tanisha.
Okay.
And how often do you review those depreciation schedules with your clients? When you look at your depreciation schedule and you see they're depreciating a computer from 1992.
To have it removed, you mean? Yeah. It's like, you still have this?
Yeah.
DOS computer? Yeah. Can I take that off now? So I will say that I do review them, but some states specifically have personal property tax returns and require those schedules to still maintain that, even though it's fully depreciated, because they want a copy of the depreciation schedule.
Well, the depreciation is still in service is one thing. You don't want to get rid of it while it's still in service. I agree with that.
No, I mean once it's out of service.
When it's out of service altogether?
Some states, Virginia specifically, has personal property tax reporting that requires the business to report assets that the business has had, whatever, and they still have to keep that even though it's fully depreciated. The business may still have it. It may not be disposed, but
they still have it.
Maybe, but it's fully depreciated. They may still have to keep it. But once they dispose it, I usually ask them so we can take it off at that point.
Okay. Now, AJ, when you're getting rid of all those assets in the 1 year that you play catch up, because let's take the new client that comes in with a 15-page depreciation schedule for a business, and you've got all these assets that you could tell are old.
Mm-hmm.
Are they still in service? Well, I do have clients that have that desk for the last 40 years.
Mm-hmm.
I mean, it's still in service. That's not a problem. But what about, the printer and the fax machine?
Or the carpet from the 70s.
Right.
No, I ask them. I go through. I don't take any new clients now, but I think it's important to sit down and ask them. Even my existing clients, if I have something, and I was like, especially a farmer, like, you still got the piece of equipment? Yeah, we use it every once in a while. I mean, even though it's 15 years old, but I make a regular habit of just asking him. That's part of my intake, is anything on the depreciation schedule, and I bring it up on the screen, flip it around, show it to him, and we go through it. Okay, then I ask him, well, if it's not there, did you sell it, or is it just junk? So I do it every year because you don't want to miss that sell that you'd have to go back and amend a return for.
Oh, I didn't sell it. I didn't throw it away. I just took it home and gave it to my son.
Well, it depends if it's not fully depreciated, and if it's taken off, and you'd have a 280E recapture of 179 if they use 179 and they take it off too soon, or give a car to their daughter that goes off to college, then you got to recapture the depreciation if it's not fulfilled the full depreciation, even if you took 179. So there's a lot of things. I always, when we were in ethics, I said, we're under the installment method with our clients. If we don't ask it, they're not going to tell us. So just you take the time, but you got to charge for that time. Simple as that.
Can I add another practice tip on the depreciation? So we were talking about taking a client, and if they use different software, the depreciation different. But it's also when you change software. Usually if you convert to a different software, the one thing that doesn't transfer is depreciation. I mean, a lot of things don't, but for sure depreciation doesn't. And when you re-enter those assets, it's usually off. I don't care which software, if you move from one to another, you usually have to make some modifications there. So depreciation is really one of our, like, I don't know why it would be different since it's such a standard thing, but it is different across software. So just a heads up that it's not just taking it from another preparer, but also you yourself switching software to look out for that.
Well, I'm not going to beat depreciation to death, but I'm going to keep on going here because every time I hear something, it brings something else to mind. And we're talking rental properties now, and a lot of times our clients come in with their information for rental properties, and you notice that they did some repairs to the tune of $40,000, $50,000, $60,000. And it's a single-family residence. Now, it's one thing when it's an apartment, a 15 to 20 unit apartment building, or a large 30,000, 40,000 square foot commercial building. But when it gets into a larger number, Jeff, we need to question that, correct?
Right.
Now, let's.
And especially we have to question it when mysteriously it always seems to be in round multiples of thousands.
Even.
It's
Well, it
amazing
says
how it
to round it
exactly ties
off.
out to that.
Yeah, no, it says to round it off. What is a repair and what is an improvement? And how many of you own rental property out there? How many of you have only had very nice tenants that took care of your property? You've all heard, those of you that don't own rental property, have a client that owns rental property, and they'll come in and say, oh my gosh, they just destroyed my property. I needed to do these repairs. Can I write them off? Jeff, can I write off those repairs?
If it is truly a repair, which is intended to return something to the condition it was in, then yes. The problem we run into, especially in Southern California, is they'll take that opportunity to not just do the repair, but then they'll do some other upgrade to the property because the tenant's out, so they can do the work without the tenant complaining, and they'll try to stuff that in the repair column as well. So you have to go through the list of what they claim they did in repairs and make sure it truly is repair.
We have to be careful though, because when we take something back to its useful life, that's an improvement. We have that clarification, and it's really not just, it'd be one thing to patch the wall.
Right.
But when they broke the sink and trashed the countertops, now we're doing an improvement. And we got this clarification because of a little case with FedEx and an airplane, because apparently an engine replacement is $1 million. And when you have $1 million engine replacement, the IRS wants that to be an improvement.
On an airplane, right?
An airplane.
Yeah, that would be about right. $1 million would be an engine. Engines on anything on planes is not cheap.
Right, but is it a number, is it a dollar amount, or is it the theory? And then finally it's the roof. How many of our clients patch the roof or replace the roof? And how many of us take the position, well, if it's a shingle roof, that is a repair. It's only an improvement if I put on a tile roof, because then I'm increasing the value of that property.
Can I add in something? I will tell you that everybody in this crowd, man, everybody, we panic when it's like above 3,000. We're like, oh, it's got to be capitalized. But if you go back to Alan's point, what he's referring to is the repair regs that became effective 1/1 of 2014. And the repair regs break it down in 3 different components, and we won't get all nerdy with it. But just because the number is large doesn't mean it has to be capitalized. If you take a 15-year shingle and you remove it and put another 15-year shingle, the same thing, that is a repair. That's not necessarily an improvement. If you go to a 25-year shingle, if you go to a metal roof, that then would be an improvement. I mean, you really have to pinpoint the repair regs, and you can't let a number bother you as far as just because I just see people panic when it's over 5,000, like, oh, that's going to be depreciated. Not necessarily if you follow what Alan was getting at with the repair regs from 2014. You just go back and revisit those rules, which everybody panicked on. Now everybody's kind of forgotten about them, but I think that's important to go through the repair regs and that FedEx case does just that. So.
Well, let's keep this going a little bit.
Okay.
We got a safe harbor rule, don't we?
Yes.
$10,000 that we can assume is a repair.
Is a repair.
So now with that $10,000 number, if I have a $10,000 improvement and I have a $500 plumbing issue, am I under $10,000? Got awful quiet in here.
I know, somebody said, yeah. And then it was all
I
of a sudden
got
it
you
was
all
just-
thinking on that one, didn't I?
Or they're all thinking, how did you get away with just $500 for a plumbing repair?
My property is in Texas.
They live in Iowa. They live in Iowa. It's cheap in Iowa.
Once that number goes over that $10,000, it's over $10,000, and now we have a capitalized issue. You know, the other thing is that we can't bifurcate. Painting is always a repair, unless it happens during an improvement. Then the painting becomes part of that improvement. So these are all things that kind of make our heads swim, which is why we're here today, because we want to keep our heads swimming.
Tax Talk Today, the tax show for the tax pro, is the innovative educational program presented in collaboration with the IRS, designed exclusively for today's tax practitioner.
There's various loss limitation rules we need to be aware of when we have a business activity.
Each program features in-depth panel discussions with key IRS executives and leading authorities from the tax practitioners community. Tax Talk Today features real-time interaction. Innovative and easy to use, Tax Talk Today is the only program that brings the IRS directly to you. Tax Talk Today can be viewed in large groups in the office or from the convenience of your home. To get continuing education credits for watching a program, purchase your CPE credits today. Tax Talk Today, the tax show for the tax pro.